following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host for the show, David Blain. We thank you for joining us today on 94.1 FM WNBU, Cable TV 10 in New Bern, as well as streaming on the internet. Thank you to everyone out there who's joining us today. We do welcome your comments and questions on the show. We get a lot of our ideas for the show from you, and we like to hear what you're thinking, what you like about the show, what you'd like to talk about, and frankly, what you don't like about the show. Our phone number is 252-633-0107. Our email is allthingsmoney@dlblain.com. That's allthingsmoney@dlblain.com. And you can visit us on the web, www.dlblain.com. There you'll find information about myself, my firm, as well as archive copies of the show. We are in the process of redesigning our website to make our year's worth of audio, video, articles more accessible, more searchable on our website. So look for that as we move forward towards the end of the year. Well, today is October the 4th as I record this, and we're officially what I would consider now in a bear market. There are various definitions of a bear market. Some people say a 20% decline in the market. There are various definitions. The one that I use comes from a firm that I use for a lot of my research, which is Ned Davis Research, and they define a bear market as a drop of at least 13% over 145 days. And so if you look at the data, the peak was back April the 20th, and that's in the Dow Jones Industrial Average, by the way. The peak was April the 29th of 2011 at 12,810. Yesterday, the Dow closed at 10,655, which is a decline of 16.8% over the past 157 days. So the key is, what do we do from here? We are, in fact, in another bear market within a long-term cyclical bear market. And for the long-term investor, this does create some issues. We've seen markets are still below the high. Back in 10/9/2007, the Dow reached 14,164. So since 2007, we've seen the markets go down precipitously. In 2008, they recovered in the second half of 2009, most of 2010, and now here we are back in 2011, reaching towards bear market territory again. One of the things that we like to talk about with people, you have both a long-term view as well as a short-term tactical view. And fundamentally, in the long term, the stock market is actually getting cheap. We've been in a bear market. If you go back to 2000, the Dow was not reach a peak in 2000. It reached its peak in 2007. But some of the other markets, especially the NASDAQ, peaked out in 2000 and have not recovered since. This is what we would call a secular bear market. And in a secular bear market, you want to make sure that you have some sort of a shorter term view, say 1 to 3 years. We think on a long-term basis the market is starting to get cheap. It may get cheaper. Europe is probably in worse shape than the United States. And of course, Japan has been in a relative economic slump for 20 years or so. And so when we're looking at the long term and allocating our capital between stocks and bonds and real estate and commodities and things like that, we certainly want to keep our eye on the long term as much as possible. But at the same time, we do like to develop a shorter term view of the markets. This is essentially between, a 6-month to 2-year time frame. In that time frame going forward, there is a significant risk of recession. I think Europe is probably already in a recession. I think the U.S. is flirting with a recession. And when I say recession, I'm talking about the officially defined version of recession. I know that there's a joke out there is that if you lost your job, you're in a recession. If you still have a job, it's not a recession or something to that effect. But I realize that things are very difficult out there. I'm talking about the officially defined recession of 2 quarters in a row of negative GDP growth. I think Europe is probably in a recession right now, and the U.S. is teetering towards recession, but at this point I would say it's about a 50-50 chance, which is why the market is acting the way it is. If we do go into recession, you're going to see much larger declines in the market from where we are today, 15 to 20%. The average bear market since 1900 in the Dow, the average has been a minus 32% decline. The median was minus 27. The average bear market lasted 410 days and the median 374 days. So if, in fact, this is a typical bear market that we're entering right now or are in the midst of, there could potentially be a lot more weakness ahead. However, if we look back in 1987, 1990, 1998, these were very short duration bear markets. In case you were wondering, from 10/9/2007, October 9th, 2007, to March the 9th, 2009, the decline was 53.8%, and it occurred over 517 days. It's kind of like here in eastern North Carolina, we just had Hurricane Irene come through a month or two ago, and even though I think it was just a Category 1 hurricane, it stayed around for so long that the damage was much higher than your average Category 1 hurricane. The same thing with bear markets is sometimes they come in quick, they do their damage, they go away, and we get back to an upward trend in the markets. Then there are other bear markets, the one we just went through, it just stays around and around and around forever for 517 days. If you go back to the 70s, 73, 74 was 694 days. So you can see that when these bear markets stay around for a long time, it just seems like they never will go away, and it can do quite a lot of damage to people's portfolio. Well, we're coming up on our first break. When we come back, we'll talk a little bit more about the current market and maybe some changes that you may want to look at your portfolio. So for All Things Money, I'm your host, David Blain. We will be right back after a few short messages from our sponsors.